podcast. How to host a successful podcast with no other than Monica Pierre. So stay tuned and check out our website for all the updated monthly calendar events that we have going on. So again, thank you for joining tonight's webinar. And without further delay, I'm going to turn it over to Veronisha Thompson with Fund 17. Veronisha?
Hi, and thank you so much for having us today, Laverne. Hi, my name is Veronisha Thompson. I'm from Fund 17. I'm currently the Associate Director of Capital Access and our JEDI Human Resource Lead here. I'd love to welcome the panel that we have present. First, just to go into a little bit about Fund 17. Essentially, we're truly about transitioning the side hustler into a formalized business, a formalized entrepreneur and business owner and startup founder. And a couple of the individuals we've been, honored to partner with today is present on that panel. And so without further ado, I'd love to introduce them. Tonight we have with us Sean Randolph from the Fuse Corp. He's currently a Fuse Fellow, and he's a representative here today from the City of New Orleans Economic Development Office. Thank you, Sean, for being with us today.
Thanks for having me.
And then also today we have one of our partners for tonight's event, Louisa Smith, who is the Managing Director of the New Orleans, Louisiana Angel Network. Hi, Louisa.
Hello, thanks for having me.
Of course. Next, we also have Alexander Bigby, who is a representative of Flight, which is one of the partnering organizations we, tend to work with here at Fund 17. Hi, Alexander.
Hi there, great to be here. Yeah, my name is Alexander Bigby, Executive Director of Flight. We create programs that have a financial education focus for vulnerable communities around the city in a similar way to Fund 17. So happy to be here, thanks.
And last but not least, we have Roseanne McGowan here today, who is one of the investors present, who essentially deals with the New Orleans Angel Network over there with Louisa. How are you today, Ms. McGowan?
I'm well, thank you. And thank you for having me.
Of course, of course. So we'd love to jump into some of the questions for tonight. I know that we're really focused in cutting through some of that lingo when it comes to equity investment. A greater portion of the entrepreneurs present, not only at the programs that Fund 17 provides, as well as the one with the New Orleans Regional Black Chamber of Commerce, is really about seeking how to understand equity a little bit better. How does, underfunded entrepreneurs, underfunded businesses, how do we cut through to that? I'd love to essentially just start the conversation of we're just going into some of that language. As far as democratizing equity, can one of you respond to how democratizing equity investments and a heightened awareness of equitability of venture investing into BIPOC-led startups? I'll rephrase the question. Essentially, I know that now there's a little bit more awareness to BIPOC-led startups. In the wake of 2020, we're seeing that there's an increase in demand of reinvesting into those marginalized communities, those underserved communities, those underrepresented communities. What could you essentially speak about when it comes to making that more accessible for those types of communities of entrepreneurs?
So I'll chime in here if that's okay, and I appreciate that question, and I know that's one that's super common these days, but to kind of rephrase it in my own word and then dive into it, we're seeing a lot of the investment community publicly change their tune on what it means to invest more in minority businesses, et cetera, but how is that showing up in actual activity? Does it actually equate to more dollars being deployed into more startups, small businesses, et cetera? And I would say arguably the answer is no, but. And the problem is that, to not get too conspiracy theory here, the problem is that part of the nature of investment is adding value, but then also extracting that value back out. And if you are not ready to negotiate for strong terms, if you're not able to see the value of your particular business and what it is you bring to the table, there's a high likelihood that you may engage in an investment transaction where you get a short-term boost in, the potential to grow, but then long-term, the majority of your value is taken right back out of that company, whether it's 5 years down the line, 10 years down the line, et cetera. And so it's very important that the investment community, that the founder community in general be aware, but particularly founders of color be aware of what it is you're giving away when you take investment, particularly equity investment, what terms to negotiate for, what things to be aware of, governance structures, voting, proxy, et cetera. So these are obviously some things we're going to touch on a bit more, but in general, it's important for us to not just be generally aware in this space, but be aware on a high level, because we're talking about building wealth and building value in our communities. And if we don't do it right, we may actually lose that long-term impact down the line.
Absolutely. Absolutely. Did anyone else had anything to add? I think I see Roseanne.
Yeah, I think that sometimes we don't know what we don't know. And I'll just give you a little background as to how I came upon the NOLA Angel Network. I've been, as a small entrepreneur, consulting company, attending NOE, New Orleans Entrepreneur Week, for a couple of years, and I'd seen Mr. Mike Eckert present several times at NOE. But then I was attending one of the series that was put on by the New Orleans City Department of Economic Development at the libraries weekly, when I saw another presentation, and I was listening and asked a few questions about the angel investing landscape. And, I asked what is it that angels are looking to get and what kind of returns? And I started probing more questions, and I was like, wait a minute, maybe I should be also participating as an angel rather than just seeking funding. I think that the Angel Network in particular is actively out there in the community, trying to spread the word, looking for diverse participants. But we also need to be helping prepare, because it's a pretty high hurdle to meet to gain that type of investment.
Yeah, absolutely. Absolutely. And so essentially, to still keep in line with some of the lingo, I think we'll be able to circle back to some of the key highlights that you mentioned as far as preparing to going into that, and some of the educational or growth strategy mindset, definitely. But essentially, some of the bare bones knowledge. What is venture investing versus stock investing? I know that, just to reduce a little bit of the confusion there, I know that some individuals might be a little bit more familiar with one versus the other. Can you all give a brief summary of the difference, or just explain in your own, words, like how does that connect to that equity investment portion?
Sure, I'll jump in here. And as Veronicia said, I'm thrilled to be here. I'm Louisa Smith. I'm the managing director of the NOLA Angel Network. And so essentially I run the day-to-day operations of that group, which is a group of approximately 130 angel investors. And we just seek to evaluate, mentor, and predominantly invest in early stage companies. But going back to Veronicia's question, sort of what is venture investing and private markets, and how does that differ from stock markets and the public? And they're quite different. But so the fundamentals essentially are the same, and that is that a company will sell a portion of itself to an investor for an agreed upon price. But that's essentially where the similarities end, particularly in the context of this panel and early stage and young startups. Stock markets are public, so any individual can buy and sell shares sort of no matter who they are, and the company has very little control over who its investors are. There are some other vehicles in the fundraising process, like micro and Kiva loans, and I'll let Sean and Bigsby discuss those a little bit more. But in terms of the private markets, those are very limited, and I sort of use the term venture and private interchangeably because they are one and the same in the context of what we're talking about today. And so they're much more closed off, and they're typically only open to accredited investors. And that term, accredited investor, it's something that's important to know, and you'll likely come across as you fundraise for your company. But it is because early stage companies or startups, they can only raise money from those individuals, those accredited investors, to grow the business. So the Securities and Exchange Commission, they've determined that early stage investing is so risky that only specific investors who can bear the loss are allowed to participate in that. And so you might hear the term high net worth individual, and that has to do primarily with income or net worth of the individual. There are other ways to be accredited. Oftentimes those could be through, specific education or degrees related to, CPAs, et cetera, but primarily through specific licensing exams. But going back to a private company, it's not something that's listed on a certain stock exchange or a stock market. You can't just walk up to a private company and try to buy a portion of their business. Instead, equity is offered through specific events that are called fundraising events, where the owner or the CEO of that company, they'll want additional money to help them grow the business, and they're willing to sell shares of the company under a specific set of parameters that are known as terms. And Sean mentioned those terms. And you might hear the term sheet, which is referred to as when you raise money, it's essentially a document that sort of everyone agrees to as the rules of the road. So private investing and venture investing is very different from the stock market itself. They're two very different beasts. And as I mentioned earlier, essentially the similarities end at the fact that you're buying a portion of the company for a specific price. Does that help?
Absolutely.
The one thing that I would add that makes it particularly risky is that you cannot get out whenever you choose. You've got to wait for a specific exit event. And so you'll hear that your stocks are not liquid. You basically got to hold it until the company is ready to let you out or go down with them.
Yep, go down with the ship.
A lot.
Okay, to piggyback on that, so in thinking about various tiers and various seed stages, could you essentially describe the difference in tiers?
Sure. So these rounds of funding that we're talking about, these tiers, they are on a continuum based on how much money the company needs at any given time to grow. And it's primarily dictated by, again, how much company they're looking to raise. So at the very beginning, an entrepreneur will usually try to bootstrap, which is the term that we use sort of in the industry, which means that they'll use their own savings, they'll max out their credit cards, they'll really do anything they can to help grow that business. Beyond that, the next stage of funding is usually around called friends and family. And that is a huge gap that I think it's really important to acknowledge, particularly in the context of this panel and the New Orleans entrepreneurial community, is that friends and family money is really limited to those entrepreneurs that are blessed and fortunate enough to have a network of close family that have the means to risk money on their businesses. So I think that's really important and something that's a conversation that we need to continue to have, because there's a gap there in that that round of financing. However, beyond that, that's typically where the angel investors come in. And that's sort of the group that Roseanne and I represent. And we're usually at the seed round, which is still very early, but it'll have more parameters and it'll be a little bit more formalized with things like a term sheet that I mentioned before, and how that deal is structured. And then past the seed stage are usually the Series A, followed by Series B, C, D, and so on. And so those names are usually just based on the chronology of how that occurs. So if you've already done a Series A, your next step will be a Series B. In recent years, it's kind of been a little less defined by like how much the company's raising. So a Series B could be anywhere from $2 million to $20 million. It really depends. But angel investors are involved for a lot of those rounds of funding. And it happens kind of on a continuum. You start with the bootstrap and you get up all the way to those massive companies you might have heard of that, are raising $100 million in their Series Ds, that kind of stuff.
Did any of the panelists have anything else to add to that? So to switch up the question, how does an entrepreneur know when to seek for an investor?
So I'll chime in a bit, and to kind of back things up, I think there's kind of a bit more of a fundamental question to ask first, which is what type of business are you creating? I think it's important to clarify the difference between a lifestyle business, a scalable business, and a high growth business. So lifestyle business means you're starting this business essentially to maybe create some cash on the side, to enhance your lifestyle a little bit more. A lifestyle business could be something that generates, an extra 30,000 for you a year, something that can generate maybe extra, couple 100,000. A business like that could potentially be financed either by bootstrapping, using money, that you're putting to the side from your regular job, and or maybe some small loans, Kiva, things like that. So for somebody in that scenario, I actually would say cautiously, don't start thinking venture capital and seed stage versus Series A, because lifestyle businesses aren't necessarily a fit for that. The second category is what I would call a scalable business, which is something that can grow large, but not necessarily at a very high speed. So something that can become, let's say a bed and breakfast can become possibly a multi-million-dollar business, especially if you have multiple locations, but it's not something that's going to go from worth 0 to multi-millions in a year or two. That's when you're starting to talk about, again, Kiva, perhaps crowdfunding, bank lenders, and some other traditional and non-traditional forms of financing. And then to get to the last category, high growth businesses. So the businesses, these are typically your tech businesses that can go from 0 to 100 or to 100 million, in a matter of years. Then you're talking about venture capital angels, because what they're looking for is to make their money back at a higher multiple over a very short period of time. So I just want to clarify that piece, that depending on what type of business you're starting answers the question of when, if ever, you actually seek out an investor. Lifestyle business, you probably will have minimal interaction with an investor. Scalable business, at some point over the course of your slow growth, yes, revenue-based investment, crowdfunding, bankers will become relevant. High growth business, yes, you're probably going to start looking for investors very early on because you need to grow at a rapid speed.
Yeah, we work with a lot of what you call kind of lifestyle mom and pop businesses in our programming. And, obviously they're not really going to be in the view of a lot of angel investors, but I always try and teach people that the best investment relationship they can develop is actually with their own banks. That is, building up that trust, getting credit, getting a business credit card, getting a line of credit, and showing, longer term that they're able to qualify for bank loans, and really just having that kind of historic kind of tracking with a financial institution, knowing your banker, really building that layer of trust, because that's how you can get investment on that front.
Yes, to talk a little bit about what angel investors look for, we're typically, like Sean mentioned, looking for relatively high growth. We're ideally looking for businesses that will give us 3 to 5 times our return within a relatively short period of time. So we typically look to exit within 4 to 7 years. Why do we look for such a high return? Because it's so risky. About half of the investments that we get into fail. And so the ones we look for ones that are for all of them to be given promising, healthy returns. And even if we were to be able to double our money in 7 years, that wouldn't really make sense for us to invest in a risky investment like a startup, because we could double our money in 7 years using alternate, more traditional investments. So yes, we also looking, like Sean mentioned, for the very big market size to be able to get that type of growth. And then for a well-defined exit strategy, because we cannot sell our shares out to anybody, Joe Blow on the street. So there needs to be a well-defined, well thought through event for how you plan for the investors to get their money back.
Absolutely. And I did want to circle back. I know that you all wound up mentioning, Kiva. Kiva essentially is a crowd-funded, like loan-based platform where, much familiar to that of a GoFundMe or a WeFunder. I'll let Sean explain that a little bit later. But from our work with Big B, he is actually one of the business case managers who connects our entrepreneurs to really getting that understanding of their financial wellness, understanding their profits and losses, understanding their monthly projections on what they can afford to, really handle their expenses, currently handle some current debt, and then how to alleviate some of those things in the future and understand what their revenue stream is looking like. So I'd like to take this time to really get into it with Big B. Essentially, what's the layout? How do you usually go about, really thinking about that?
Well, I mean, it depends on the state that the business is in, but it's really focusing on things like personal credit. Have they? A lot of businesses we work with, some of the owners may have had some personal credit issues, and so it's working around trying to figure out what the source of that is, growing that, making sure that all of the documentation for the business is in order, because that again is a huge hindrance to getting any kind of financing. If that's not in order, it's then looking at, do they have a bank account? A lot of businesses on our programs don't have a business bank account yet. They're still commingling all of their personal and business funds. So it's then separating that out, finding a point of sale system for them to use. Then it's about, bookkeeping and actually getting the funds going into the right account and making sure they're accounted for correctly. Working with a CPA is another important thing, working with marketing experts. So it's really just bringing in all these resources to businesses to make sure that, the back end of the business is running smoothly, they can track everything. And then when it comes time to producing accurate financial statements, say a potential investor or more likely a bank, for a line of credit or a bank loan or a Kiva loan, they can very quickly and accurately pull their financial statements and understand them as well. And that's another thing that we do a lot of is I teach basic accounting to business owners, because most small business owners will never at any stage have learned this, which is understandable. It's not really taught in schools, but it's probably one of the most fundamental parts to running a business is to understand how finance works on at least a basic level. So those are just some of the things that we work through on Fund 17 and Flight's programs.
And Sean, I'd like to essentially understand WeFunder a little bit better. I know that, it's really focused on that equity element that Louisa and Roseanne have been mentioning. If you could speak to that.
Yeah, and to give a little context around it before diving in, Louisa mentioned before that traditionally, if you have a business, a person cannot just come up to you and say, hey, I want to buy a little piece of equity in your business unless they're an accredited investor. Crowdfunding changes the game of that a bit, which is a very key opportunity, again, for minority founders, because if there isn't that traditional friends and family wealth there that you can go to an uncle or auntie or mom and dad and get an initial 10,000, 50,000 to start up, being able to essentially access your community, whether that be your geographic community or the community as far as people you know on the internet, your social media network, etc. That becomes a new opportunity for you. So WeFunder is an example of a crowdfunding platform. They do both equity-based and debt-based. I mention them a lot because they don't charge up front, which is something I think is very important for folks. But also getting back to Bixby's point, it's important for there to be a solid understanding of your business, the financials. If you're talking about accepting people's money and offering them a return at some point, you need to understand the ebbs and flows of your business financially. So if somebody comes to you and says, hey, what's next quarter looking like? You need to know what they're asking you, what financial statements to look at. You need to have financial statements so that you can say, hey, we're looking at a slight increase since last quarter. Oh, how much of an increase? Oh, about 10% of revenues have increased since last quarter to this quarter. Those are the type of questions you want to be able to answer if you're going to have investors or lenders giving you the capital you need to expand, grow, etc. Once you get to the point where you can get that understanding of your own business, answer those questions, then I would say you're ready for the Kivas, for the WeFunders. Now, am I saying to hold off completely? I think there's a degree where you can simultaneously be educating yourself and still pursuing these things, but your highest chance of success is going to be if you can show and inspire confidence from the community that you know what you're talking about. Because when they go over your profile and they look at the video where you're talking about your business or look at the documents, it'll stand out and it'll reveal itself how well versed you are in these things or not. And that'll impact your ability to raise money.
Berenicia, may I ask a question? Because I'm just very
Absolutely.
curious.
Absolutely.
So in regards to, it goes back to the question that you asked about entrepreneur knowing when to seek an investor. So what are the first steps, if you all can kind of give us the steps into walking a business owner to those that are participating on this webinar? Could you kind of give them some guidance or what those steps are from the very beginning to all the way up to the time they begin to talk to an investor?
Yeah, I'm happy to jump in. I think Sean, you as well. But I think it revolves a lot. You have to do some soul searching, I would say, because when you seek an equity investment, it means that you are giving up a portion of your business for something. So it goes back to what Sean was describing as to really determining if you fall into one of those buckets and what is going to be appropriate for not only you, but the health and wellness of your business going forward. And you need to decide if this is something that the only way you can grow your business is by taking outside equity investor money, because that really changes the name of the game. The reason people approach institutional financing from an equity investor perspective is because they simply cannot obtain bank debt. There are reasons behind that, and Big B was describing some of them. And I know Flight is working to help prepare some of those entrepreneurs to be in a position where they can obtain that debt. But if you have the option to get a loan, that's sort of the number one rule of business is debt is always better than equity, and because it means you're giving away a portion of the business. So I think the first step is to do some soul searching. I'll turn it over to Sean and Big B and maybe Roseanne to talk a little bit more about it, but I think that that's really the first step and one of the most fundamental.
Yeah, I would agree with all that. I will throw out this because there's always an exception to every rule.
Yes.
And this will lead into something else as well. Yes, debt is better than equity because it's allowing you to hold on to the ownership of the business. However, I would say there are situations where it's worth sharing ownership of your business with an investor, particularly if they're what you call strategic investors. So a strategic investor is somebody who's maybe in the same industry as you, or has the same industry interests. So a strategic investor could actually be another company that wants to invest in you. So for the sake of example, if you have a barber shop, a strategic investor could be a chain of shops that are in, you know, a nearby region that want to kind of absorb or partner with you to expand their footprint. In that sense, sharing ownership could make sense, because not only are you getting the capital to expand, you're getting plugged into a deeper network within your industry. Maybe that impacts the cost that you have to pay for supplies. Maybe that impacts you having a marketing team now that you have a shared brand to do things with and things like that. So I think that's an important thing to add.
Yep.
Go ahead.
No, I was going to say, absolutely. You know, certain investors are value add investors, others are not. And so it's, you know, you also have to be picky about who you bring on in that sense as well.
Yeah.
If I could add to that, I think the closer you are to having a completed product beyond an idea. I mean, the seed stage investing may begin all the way with just an idea, but investors prefer for you to have demonstrated prototype of your product, and also be able to prove that you have customers who are willing to pay and pay enough that this is going to be a viable business. And then along with investing your own dollars, if it's at all possible, I would always encourage people to go after grants and money that does not have to be repaid, either in loan form or in equity. And just like Sean says, there's advantages to taking on equity. Sometimes you'll find investors who are able to bootstrap beyond what they've done, but they want to share the risks just because it's a pretty risky venture and they don't want to put all of their eggs in one basket. And then, having a good business plan is also key, with all the numbers and the cash flows, and making sure that you've looked through beyond just the immediate horizon, and you understand what your cash flows and your cash needs are going to be down the road in order to finance growth as far as inventory, et cetera.
And if I could add to that really quick, jumping back to the question of where do I start? Network, you know, chambers of commerce, your local chamber of commerce, i.e. right here, is a great place to network with other businesses. Surround yourself with other people who are also, over the next few years or months, going to be raising money, because as they meet people, if you know them, maybe they'll connect you, you'll be in the right circles, you'll be invited to the right events where investors may be there. So network as much as possible.
Yeah, just the accelerator programs that we have in the city as well. Of course, Fund 17, Propeller, Idea Village. There are a wealth of options like that. Where if you network into those, you immediately have spokes of networks all across the city. So that's another thing I really encourage people to do.
And thinking about presentations for, let's say, a pitch. I know currently for Fund 17, we're in the midst of our Capital Ready program, and we're really setting up our entrepreneurs for the mock pitch competition that's coming up. Because what we're able to find out for New Orleans's finance and small business support ecosystem is that, we come in contact with entrepreneurs who've been to 1, 2, 3, or 6 of the available resources here in town. And so because we know that they're essentially going to be at our partners next and some of the offerings that they have, we want to at least, really give them a full rounded approach to it. So essentially, to speak to that, what is the standalone compelling presentation? Like, what does that look like to an investor? What does that look like to anyone who's really trying to help them push their financial projection portion of that presentation? And
I can speak a little bit to, solely what the NOLA Angel Network is typically looks at when we receive an application for funding. It generally includes a pitch deck in the form of, a PowerPoint presentation or a PDF. And we are looking essentially to see something that provides information on why it would be a compelling investment for our group, and things that we like to see information on and things that stand out. Go back to a little bit of what Roseanne was saying is, what is the problem that your product or service is solving?
Louisa? It looks like we lost Louisa.
Yeah, I think we may
I'll jump in right here.
Pay for it and how much. I think if you have those two things on lock, then everything else is really gravy, because you can come up with solid financial statements and you can come up with a good team and a good exit strategy. But those two sort of, why is your product or service better, and how much and why people are going to be willing to pay for it?
I think to give some basic presentation guidelines, I think the presentations are generally like 10 minutes long, so no more than 10 or 15 slides. And then you would start basically with a compelling slide, maybe use some storytelling to catch attention around the pain point. And then what is so interesting? Why does your solution trump other alternatives out on the market? And then we like to see the size of the market, that you have a massive market, and hopefully it's one that's growing. And if you use graphics to be able to show that very succinctly, that helps. Like Louisa said, the business model's important. And then we look closely at the team also, the management team. Like Louisa says, you can build a management team, but the core founder needs to be one that's coachable, willing to accept help, willing to pivot when things are not working. And then also it helps to have the backing of a strong set of advisors that you can turn to, and hopefully they people who are not paid early on. And then we also look to see if you have intellectual property and a defendable market position, because if somebody's going to be able to come in and copycat you, then we may not be interested in putting our money there if we can't guarantee that you're going to have a competitive advantage long term. And then I would say the financials, just also graphically, very brief slide. And then it helps to have your specific request and exactly what you're going to use the funds for. And so no more than 10 or 15 slides that you go through pretty quickly, but then I'd also encourage you to have a set of backup slides, because you will have questions. And we generally allow another 10 minutes for questions. And then also to practice. Practice with family and friends and know what questions to anticipate.
Just on the financial slide, I see a lot of financial slides that are often very overly ambitious with projections. And I always advise in certain cases to be more conservative, because you're going to get asked about those numbers. And if you can't justify those numbers in your presentation, it's going to really put a lot of investors off. So.
And I know that Big B is currently assisting some of our wonderful entrepreneurs in the pitch competition coming up. What are some of the things that you've been able to work through with them? What are some of the highlights of that? And then how might one progress on, I guess, narrowing down their ideas? Let's say I'm an entrepreneur, I have 3 ventures coming up, and I might be having some of a hard time just narrowing down which one I want to speak about and boast.
Yeah, it's a good question. So yeah, a lot of the entrepreneurs I work with are trying to do 10 things at once. They're so hardworking, they've got so many brilliant ideas. And a lot of what I try and do is, distill what their best ideas are, but really kind of tell the story of them through their product, and really find out which area of their business is telling their story best. Roseanne was talking about storytelling earlier. I think that's that's a really important part of pitching to an investor is, you're selling not just the business idea, but you're selling your story as an individual. And so a lot of what I try and do with pitch competitions is I try and find, the emotional hook of what this person is doing, because these people are doing fantastic, amazing things. And I want people in the audience to realize that. So it's not necessarily about the numbers, but it's trying to get the numbers to help tell that story. And sometimes I tell people not to have any numbers at all because they would detract from the person's pitch. So it really depends on the situation.
Great.
I'd also say that there are really, really great resources online. If you look at, some of the great pitches of all time, the Airbnbs, the Ubers, all of that, they all have a very common thread running through them. And I would just encourage you to look at pitch decks online. Some of those companies, that have gone on to do unbelievable things. Their earliest pitch decks are available to see, and it's just a really interesting exercise to take that in, and ways that you're obviously not going to copy them, but sort of note the things that they all have in common and ways that you can apply that to your storytelling and your narrative as you present a pitch.
I did want to essentially ask about additional events coming up and educational items where entrepreneurs can go to, from each of you all's organization. You really spoke to, what the investor looks for and items like that. Is there any community facing events that you, Louisa, and yourself, Roseanne, that you all are working towards coming up within the fall season? I know that's, right around the corner.
Yes, we have actually a lot of sort of market opportunities in which we participate in different educational sessions, mentoring sessions, things that are ways to have touch points throughout the community. We're very involved in a lot of the universities throughout the city, through things like Fund 17, Propeller, Idea Village, others. And part of the reason that we joined this evening to put on this panel together is that NOLA is working really hard to make our initiative for underrepresented entrepreneurs a priority for our group, because we know that it's important for both sides of the table, the investor as well as the entrepreneur, to represent different backgrounds. And so that's something that we're really prioritizing this year, and have a number of events primarily coming up in the fall that I'd be happy to share with you and the community, because like I said, it's something that I feel very important about. I know our board of directors does as well, and we're trying to be as active as we can.
Thanks. And I have seen that Flight has 1 or 2 events coming up in the next couple of weeks or so. Could you speak to that so that the entrepreneurs can know about that as well?
Yeah, sure. We're having a meetup on July 31st from 3 to 8. It's the first time that all 30 of the businesses on our program are going to get to meet in person. So that's going to be very exciting for me too, because I've only actually met 2 or 3 of them in person, and the rest will be a first time for everyone. That's going to be at Broad Street Cider and Ale, which is right next to Propeller's office on Saturday, July 31st, 3 to 8. So that's just a good opportunity to meet other folks on the program, get to meet myself and also partners who are on the program, folks from banks, folks from insurance companies, marketing people, all people who are networked into our program. So it's a good networking opportunity and a good opportunity to speak to folks who've been on the program for 4 months of the 12 months.
And we're really curious to see, I see you want to go. Sorry, Roseanne.
I was just going to say, along the lines of what Louisa had mentioned, the mentoring, I'm volunteering my time to help out. My background is in finance and also in engineering. I'm a chemical engineer. So helping get folks ready, especially I know there's a need to help them build their business models, the financial model. And I'm looking forward to meeting some of the participants at that, some of the attendees at that.
And Veronisha, if I may just chime in, one of the things that we do here at NRBCC is that we always want to share valuable information to our members. And so I know that Fund 17, and thank you so much for being a member of the chamber, and to Flight, again, if there's information that you think that would be beneficial for our members, please pass that along so that we can inform them. And so they can begin to become more familiarized with your organization and take advantage of the tools that you have. So please, I encourage you all to do that. There seems to be a question here, Veronisha. It says Kids Sports Center is looking forward to collaborating with these great organizations. And so I'm not sure who Kids Smart Center is, but obviously, because of this webinar, they're going to connect with you all. So thank you so much.
Yes.
I'm sorry, I have a question before we go to the next level here. And that is, do we have any data to actually show the number of Black businesses in the New Orleans metropolitan area that actually connect with investors and been very successful in that regard?
I saw a recent report that I think came out of Tulane about the startup community specifically. So not the entire community, but the startup community, minority startup founders. And unfortunately, the numbers are pretty in line with what they are nationally. Across the country, minority founders are engaging with and transacting with investors at a much lower rate. I won't get into that too deep, but yeah, unfortunately, I don't think the numbers recently that came out have showed too much change on that front as of right now.
And so, Sean, you said that you didn't want to get into it too deep in the weeds, but I'm just curious to know if this is something that's not just in New Orleans, but across the country. Do any of you, not just Sean, but any of you have any idea why? What are the reasons you think?
So I'll jump in first. So I'll try to keep this brief. This is what happens when systems and institutions are created without everybody at the table. I'm trying to think of an analogy, but if a bridge is being built and only certain type of car owners are part of the bridge building process, if everybody who's part of the bridge building process drives motorcycles, then they're going to build a bridge that caters itself to motorcycles. But then when they open up that bridge, all the people who have cars are going to say, why isn't this bridge wide enough for me to fit my car through, etc.? It's because it was designed without car owners in mind. In the same way, much of the investment community was designed and launched without founders of color in mind. So what happens is you have investors who have certain preferences, they have certain metrics that they measure a business by. They say, this is valuable and this is not, this industry is attractive and this is not. So when a founder comes and say, hey, I have a business idea for, beauty supplies and how that is a market within the African-American community, there's a disconnect. I've never heard it, I'm not familiar with that industry, I don't get it. And it's hard to win somebody over and get them to write a check when they don't even connect with your ideas on a basic level. That's one element of it, which is why it's very difficult to overturn, because you're essentially asking people to rebuild the entire industry with everybody in mind. And some people would just rather make money than do that hard work.
I also think some of it comes down to what I was describing a little bit earlier, is that friends and family round of funding, because that is a really critical inflection point for a lot of businesses. And it's often sort of the make or break moment for them in either, creating the prototype that Roseanne was describing, or, proving out the market and getting revenue. And if they're never able, if they do not have friends or family with personal wealth that are able to support them and get them past that phase, then a lot of those ideas just never come to fruition. And I think that there's a huge gap in there in which small amounts of funding for really viable ideas are just, they're just never getting off the ground.
Couldn't agree more. I mean, to give you an example of how big the gulf is, the median Black family assets are $9,000 in this country. For an equivalent white family, it's almost $200,000. So, that amount of money to be able to borrow against or get in an early stage, that's a huge, thing that's missing for most Black founders. And it's a struggle to find that. And we're just not filling in the gaps structurally.
So is there a way that with that being said, and I agree with all of you, is there a way that we can encourage people to, and I think Sean, you and I talked about this, where we all pool our money together some sort of way, like for instance, if I wanted to give $100 and we can do some sort of campaign of some sort where we say we need 1,000 people to give $100, right? And we identify, I don't know how much of that would help, but it's a start.
Mm-hmm.
I'm sure there are organizations out there that do that, but is there something here in New Orleans that we could possibly look at and identify 1,000 people and put $100 in and begin to invest in companies here in the city?
Yes, so I would share two things really quick, and both are ones that I'm directly involved in. One, I mentioned WeFunder, and I mentioned them a lot because they're part of a pilot we're doing right now, which in many ways is just that. I am introducing and connecting business owners of color to WeFunder so that they can access that broader community that can contribute $100, $500, $1,000 per person to this group of businesses as they go out and try to expand. So that's very much something that is still in the beginning stages, but it is happening and will continue to happen. So if there's folks who would want to get plugged into that, please reach out to me. The second thing is, I think it's important too, as valuable and as important as it is for us to mobilize our dollars and support our businesses, there's also a need for us to recognize what other places there are value. And the quick kind of fun fact I'll throw out there is that it's a bit dated, but I want to say back in maybe 2017, the venture capital world collectively in the US deployed something around $60 to $70 billion into around 2,000 to 3,000 startups. What most people don't know is that the private foundation world, so that's Bill and Melinda Gates Foundation, all the way down to local community foundation, also deployed $60 to $70 billion into around 400,000 nonprofits. This is why having nonprofit partners is so key, because they're connected to just as robust of a capital source in philanthropic capital as venture capitalists have on their side. So the thing I tell a lot of business owners is, do you want to compete to be one of those 2,000, or do you want to partner with one of those 400,000 who have access to this equally robust pool of money and create public-private partnerships that can also help fund your business? And that's not something that's super well known or commonly done, but I think it's equally as relevant of a strategy for people to research.
So how can we get that word out? How do we get that word out to the public, or like to our members or individuals that are interested? Like for instance, if one out of our 400 members that we have say, hey, let's just say they need $10,000 to buy that piece of equipment. And from that piece of equipment, they would be able to hire someone, right? So they created a job, they bought this piece of equipment, it's increasing their revenue. How do we get that word out?
Yeah, I mean, it starts with events like these, and quite simply, connect with Veranisha, connect with Fund 17, connect with myself. That is literally why I'm here in New Orleans in the mayor's office. It is to build projects around Black wealth creation and supporting Black businesses. So, how do you get it around on a more scalable size? Yeah, I'm happy to talk to you one-on-one and figure out how we can better do that as well. But in the meantime, flood my email if necessary, and I will do what I can to help.
Great, great. I see a response from our membership chair, Ms. Chantel Green. Thank you so much for being on this webinar. You've always been such a great supporter, and we appreciate that. Bernice, I see that we have a question. Do you want to address that question? Ask it and have the panelists to address it?
For sure. So Tracy asked, do angel investors require a certain level of personal and/or business credit as part of their considerations to investing in a business?
I would say short answer is no. We never look at the personal finances of an entrepreneur when we're evaluating the business. When it comes to their, business and their line of credit, I think, we evaluate that in terms of the financials. And if they've borrowed against that, we look at maybe any debt service that they're obligated to, because that'll be a part of, the financials and how that trickles down. But I wouldn't say that a poor credit has anything to do with necessarily the merits of the business. Somebody with a bad credit score doesn't mean they can't be a phenomenal entrepreneur and business owner.
One of the things that we look at very closely, like I said, is the management team. And experience as an entrepreneur goes a long way. And it doesn't matter whether or not you've been successful. You don't necessarily have had to be successful in the past, because a lot of times you learn a lot more when you fail. And so, you may have bad credit because you've invested before and failed. And as long as you show that you've learned, that you're going to do things differently, and that you have the smarts to adapt, you still make a great investment.
And if I could add to that too, I think that's a great point. Don't be afraid to tell your personal story when you feel comfortable, because to your point, maybe you're saying, hey, I have a story of a failed business that I tried to start, but I ran that business while working 2 jobs, taking care of my younger sibling, commuting 2 hours to work round trip each day, so on and so forth. So that shows that I'm resilient. That shows that I can squeeze value out of very little money. That shows that I can scale something up with minimal support, et cetera, et cetera, et cetera. Those are all assets that can be highlighted possibly through your personal story, even though that's not something you'd be taught to necessarily share in a pitch deck.
Right.
Mm-hmm.
I just wanted to say I'm so happy you just mentioned the part about personal experiences, because what we're really starting to see now is, from the standard image of anyone who is involved with major equity and things like that, or even just regular old going for a job, they're starting to consider these personal experiences, these acts of resiliency when it comes to our community of entrepreneurs, rather than, learning these types of resiliencies from jobs or certain experiences like that. And understanding that the cohort of individuals who we do work with, we have to understand their social determinants and what they're up against. So those are some of the challenges that these entrepreneurs have. And much like you mentioned, they might not have that full scalable business. No one's trying to be the next tech bro, or maybe they are. But at the end of the day, some of the entrepreneurs that we are connected with, we hear stories about, they are passing on their grandma's recipe, and they keep getting great reviews about it. And so they kind of stumbled into a business, and then that business was able to help for utility bills. It was able to aid them in their next, car payment. It's able to aid them and so forth and so forth. And so I'm really happy that you mentioned the part about community resiliency and how that can actually be broken and down into that compelling storytelling. And when considering a Kiva loan, I know that it is a crowd-funded platform and a crowd-funded nonprofit that really tries to make accessible and make loans more accessible. I think storytelling is really what pushes it to that social underwriting element, and having that community that supports you and having that nonprofit that supports you with technical assistance. And so you're not really left to figure that out. You actually have resources to your avail.
So Berenice, could you expound a little bit more on the Kiva loan?
Mhm. Absolutely. So when it tells with Kiva, it is a zero interest up to 15K loan that is crowdfunded. So it's individuals like myself, yourselves, Louisa, Big B. We're all just putting in $1, $2, $25. No one's making any money off of it. So whatever you repay with that loan, I get my same $5.50. I'm not making any, so it really pulls out, I guess, like some predatory lending experiences as well. So it's really the community buying into your offering, buying into your products, your services, and it's because they really want to see you flourish. And so because it's a global platform, I can be in Russia donating to your organization. And if I'm supplying you with a loan, of course, I'm going to be a consumer once you get your e-commerce store open up. And so it really just expands not only your customer grouping from being more local than to a little bit more expounded. So I will say that.
So if someone was interested in a Kiva loan, would they reach out to you all? I mean, I'm just curious if they were interested. How would they know more or seek assistance in that?
Yeah, absolutely. So someone can go on the Fund 17 website, www.fund17.org. They can reach out to myself more directly, Veronicia@fund17.org, or you can even send over an initial email to kiva@fund17.org. I can set up a consultation. We can break down some of that application process, some of the application processes, what they ask for, what is a factor in that. And then also we connect our entrepreneurs to a business case manager, much like Big B, who's on the panel. We present financial specialists as well as marketing specialists with them. And we also partner with different organizations, so much like the Angel Network, and then also the Regional Business Chamber of Commerce, and some of the other partners, Propeller, LePage Center, and so forth, just in case there's some resource we don't know, something we don't have. And so it's really just keeping in line with what's needed for that exact entrepreneur and potentially connecting them to a greater network who will be able to assist with the sustainability of their business.
Well, thank you for sharing that, Berenice. So I know that time, wow, this has been great information. Thank you all for this. I know time is running close here. So I thought that maybe each of you can just give some closing remarks and maybe put your contact information in the chat for those that are participating so they'll know how to reach you. So Berenice, why don't we start with you?
I'm really just going to say thanks. This was a great opportunity, not only for Fund 17, and I'm super excited to grow my own connections and even just get a chance to see who some of the investors are in our current area. That's pretty much what I have to say. I'm just here for grateful knowledge and just being able to assist. I think when it comes to reaching out to Fund 17, all of our emails are accessible, and you can literally find us at fund17.org. Our emails are up there. Our current staff is up there. We also have an Instagram account that we're trying to be a little bit better with. And then my email, I'll be dropping that in the chat.
Sean?
I would just thank you all again for having me, and to the people in attendance. Just encourage you all that resources are out there, that there's folks like everybody on this panel right now that are happy to help, happy to support. Reach out to us. I can empathize, having been an entrepreneur several times over before. I know it can be frustrating. I know you probably want to give up every other week, etc. But keep pushing, and however we can help, we'll help.
Louise?
Again, thank you for having us. I'm really thrilled that the NOLA Angel Network could be a part of this. Again, just as Sean said, encourage you to keep going. And something that I think is important to hear from us is that even if you apply for funding from the NOLA Angel Network and we tell you, you may not be ready or whatnot, we are always very enthusiastic to mentor and advise through that growth phase until you get to a point where you can reapply for funding and make it through a pitch and a due diligence process. So just because we may say no up front doesn't mean that we're not willing to help you get through some of the hurdles that we may have thought were risks from the get-go.
And I would encourage you to similarly not be disappointed. I would say that a lot of times helpful to think of no as a not yet and not a no. So keep going. Your yes is coming. One step closer to yes.
Yeah. And again, a huge thank you for me and being part of this conversation. It was really, really great to meet everybody and for everyone on this call. I echo that. I'm an entrepreneur. I started Flight in 2017 and spent 3 years running into hurdles, running into walls, being discouraged, lots of challenges, and kept going. So if you're passionate about an idea and you really believe in it, and you love what you do, keep following it and keep pushing it, because eventually you will achieve that success. And really use as many of the resources around you as possible, because there are lots of resources in this city that are available and there, but it's about going out there and really tapping into them as much as possible.
So panelists, thank you so very much again on behalf of NRVCC Board of Directors and staff. We just appreciate you all. This is what we're all about here at NRVCC. As you can see on the slide, we say that we are a resource and a voice for Black businesses and entrepreneurs. And we actually strive to do that each and every day. And so these type of conversations are very, very valuable to our members. And again, I just want to talk a little bit about some of our upcoming webinars that we have. Again, as I stated earlier, we have Monica Pierre. Many of you may know her as one of our radio television personalities. We'll be doing a webinar on how to host a successful podcast. We also are going to do a procurement workshop with RTA. That date is coming up soon. We also are going to be partnering with the NCAA Men's Final Four in regards to upcoming procurement opportunities. As you know, we will be hosting the Men's Final Four in March of 2022. And also we're going to be doing our first in-person event with JP Morgan Chase, which we call our Chat and Chew, on August the 19th. So continue to check out our website. We do have a new website, and I want to give a special thank you to Kenneth Morgan, who was our membership consultant, but he also took the lead in designing our website. So we're really excited about that. So again, to those that are participating, please, I will ask that you take a few minutes to fill out our evaluation, because it's a survey, because it's extremely important to us for you to tell us what you would like us to host. So again, thank you, thank you, thank you. And I look forward to seeing you at the next webinar. Have a great evening.
Thank you.
Thank you.
Thanks.
Thank you, everyone.
Bye-bye.
Bye.
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 Bye.